Hello and welcome to Smaulgld's 12 Ways Silver Differs from Gold. This is a blog post I did back in mid 2013, and it is a blog post that I sent to new subscribers. It is not investment advice. It's not making an argument to prefer one to the other. It's just merely meant to show that there are at least 12 significant differences between the two metals. I'm going to go through them now because I think there's a lot of people on YouTube that for whatever reason don't visit the Smaulgld site, aren't subscribers, don't get things like this. But if you want to become a Smaulgld subscriber, you should, because it's free. You fill in your email address up at the top, and you never know when Smaulgld may not be on YouTube, but I should always be on the Smaulgld site. So let's go through the 12 key differences between silver and gold. Not in any particular order, but for the first one is central banks don't hold silver. While gold and silver have long been considered money, central banks do not hold silver. Nearly all central banks in the world hold some level of gold. And those of you who follow Smaulgld know that we track the top gold holding nations of the world, at least on what they report, but they do not report that they own any silver. Now, question is, why do central banks hold gold? Well, Ron Paul asked that question, and Bernanke tried to worm his way out and say, well, it's tradition. Well, gold has not been part of the monetary system, international monetary system, since 1971. If it was only tradition, most central banks would no longer hold gold. A lot of central banks have lowered their gold positions, some haven't, but gold is part of the monetary system. It is counted as a reserve on central banks' balance sheets. Silver, on the other hand, is not. Now, what does that mean? Well, in one sense, it means that, first of all, gold is easier to store than silver because it's denser and it's more valuable per square ounce or square footage of storage space. It also means they prefer gold because gold basically is almost exclusively a monetary metal. It does have industrial uses, but most of them are too expensive to be widespread. And it is preferred as jewelry to silver. So gold is something that central banks hold. It may not have as long of a history of money in the sense that people use it day to day, but there were gold coins up till 1934 in the United States and elsewhere, silver into the early and mid 60s. But gold is something that central banks hold. That means, though, that central banks can manipulate the price of gold via arrangements, and there are arrangements among central banks, how much they can sell, won't sell, do sell, but they do own a significant portion of the world's gold, about 20%. So that gives them leverage over the physical gold market, where they can buy, sell, and lease, hypothecate, borrow, and lend gold amongst themselves and with third parties. And they don't have that ability with silver. However, we've seen that if the price is set not in the physical markets and is set on the paper markets, that is far less important to have a stack of gold or silver. It's more important just to have the fiat dollars so you could do naked shorting. So it's not so much of an advantage now that the markets are not manipulated based on supply and demand. They're manipulated based on paper contracts. So the fact that central banks have a lot of gold doesn't give them the same leverage to manipulate gold, because you can manipulate it without even having gold. I always say that the COMEX is an exchange where people sell gold they don't have to people who don't want it. So that no longer is an advantage for manipulation that the central banks hold gold. Now, the silver market is much smaller, number two, much smaller than the gold market. I always update this stat, but one extremely wealthy person could buy an entire year's worth of silver mining production. So when I wrote this in 2013, in 2012, there was annual silver mining production of about 787 million ounces. And at $20 an ounce, it was worth approximately 16 billion. Still about the same. You have 850 million ounces produced a year. It's $18 an ounce. You're in the 13, 15, 16, $18 billion range. And I've produced a chart from Forbes somewhere. We didn't produce it, but I linked to it. There's about 45, 50 people in the world that have over $16 billion. So you can buy a lot of silver. Silver is a much smaller market. Well, that means I think that it's easier to manipulate if it's smaller. Also, it means if someone tried to make a run at, like the Hunt brothers did, at accumulating just a quarter of it or a half of it, then it could really go much higher. That's what happened when the Hunt brothers tried to get as much silver as they possibly could. They had a lot of money and they spent all their money and they leveraged the money and they tried to get as much money as they could, as much silver as they could, and they drove the price up from the single digits all the way up to $50. 3, the price of silver is more volatile than gold, and that's basically a function of the smaller size. And because it's smaller, when the price rises for both metals, silver rises faster than gold, and the reverse happens when the prices drop. Number 4, gold gets recycled in larger amounts than silver. And that's merely because gold is so valuable that it doesn't get lost as often. It gets recycled more often. Most of the gold produced every year only adds to 1, 2, 3% of the overall stocks, because most gold that is traded, bought, sold, made into jewelry, made into coins is from existing stockpiles that have been recycled. When you hear the old story, all the gold that ever mined is still in existence in some tangible form and can fit in 3.5 Olympic-sized swimming pools. As I say, nearly 40% of the annual supply of gold comes from recycled gold. And the rest of it is just sitting around somewhere. So the newly mined gold gets pushed into jewelry, then you get recycled gold, gets traded. A lot of gold is around and is just being held. Now, silver is also prized and saved for investment, silverware and jewelry. It's used in electronics. It's used in increasing amounts for solar panels. But all that silver used for electronics and solar panels has basically acted to replace the silver demand that was lost for photography. But when you use silver in electronics and you use it in solar panels, for the most part, it gets thrown into electronic waste piles, doesn't get recovered. Although it can be recovered, it's not difficult to recover. It's just time consuming and perhaps not economic to recover. So it doesn't get recovered at the same amounts. However, if the price of silver were to rise, say for over $50, $60, $70, it probably would get recycled in greater amounts. Just as junk silver, a lot of numismatic coins were lost in 2011 and in 1980 when the price rose significantly because the silver value was worth more than the numismatic value. So you'll see that if the price of silver rises higher, there is an incentive to do some recycling. That's number 4. Number 5, silver is far less expensive than gold, obviously. Now, it is a precious metal, but it trades closer in price to base metals, copper and nickel, than it does to its precious metal cousins, gold, platinum, and palladium. Number 6, the price of silver trades far lower than its relative abundance to gold in the Earth's crust. So silver's lower price relative to gold had been based on its relative abundance to gold. The traditional silver-gold ratio is 16 to 1, but the current gold-silver ratio at the time was 60 to 1. Now it's 70 to 1. And the reason that the gold-silver ratio was set at 16 to 1 was not just because that was the estimation of the amount of gold to silver in the ground, and that's probably different now. It's probably a lot lower, the ratio. So you would think the gold-silver ratio should be even lower, that silver should be even higher. But that was set not as a ratio. It's a ratio, but it was set as the ratio for which to make coinage. Once they got rid of that, once the coins were gone and the governments didn't make coins anymore, the quote free market valued gold a lot higher than it did silver, irrespective of the relative rarities. Now, I did a few blog posts and YouTubes on this. Rarity is only one component of value and price. And the examples I give are platinum. Platinum is definitely rarer than gold, far more rare than gold. It only exists in 2 countries in the ground. There's very little above ground platinum compared to gold. And platinum is useful as an industrial metal in catalytic converters, and it's used in jewelry. It's just not as desired. It doesn't have a monetary history, and therefore its rarity is discounted. Similarly, silver is, there's no two ways about it. Silver's rarity is discounted compared to gold. And I use another example, which is just my own artwork, which I made very few pieces of art. None of them are any good. Picasso has made thousands of pieces of art. Therefore, you'd say, well, my art is rarer than his. My art should be worth more money than his. Well, it's not, because rarity is not the only component. That was number 6. Number 7. Well, this was interesting. This was back in 2013. When gold and silver were smashed down, gold outflows are pretty large in the ETFs, and the silver ETFs did not lose much silver. Gold did. Also, I can update this post, is the amount of gold held in COMEX vaults is not that great. It doesn't keep growing. We're seeing a growing amount, especially in JP Morgan's vault, of silver. Number 8, Warren Buffett, a known opponent to gold as an investment, once owned silver. Yep, he once owned a large amount of silver. There's a link here to it. I'll click that and open that up. But he sold it pretty soon after he bought it, which was kind of strange that he would do that, because he didn't participate in the rise in silver from 2004 to 2011. In fact, he bought it in 1998. He bought 130 million ounces of silver. You can check out the link on this that's put in this blog post and linked below this YouTube. Yeah, so he had silver. He thought it was a good deal, and he got rid of it. Now, who knows why, what deal he made, or whether that was just his investment decision. We may never know. Number 9. There are coins in circulation today that were once 90% silver. So up until 1965, we had Roosevelt dimes, Washington quarters that contain 90% silver. So the ones that you get today, there used to be ones just like them, only they were 90% silver. They weren't made of copper and nickel. Also during World War II, many people don't know this, 1942 to 1945, Jefferson nickels contained 35% silver. And that was because nickel was a very important commodity for the war, as was copper. So they used silver in the production of nickels, just like they used silver in the production for the, what's that project? The project to build the nuclear bomb. During World War II, they used silver to conduct electricity for the magnets instead of using copper, because copper indeed was scarce. Number 10, 50% of silver's demand comes from industrial uses. Gold industrial demand is about 10%. And that's because silver is widely used in electronics and solar energy and industry, and it's also, the rest of it's used for jewelry, silverware, and investment. Only 10% of gold's annual production goes to industrial uses, with the rest being used for jewelry. Now, while silver is the best conductor of electricity, even better than copper, gold also conducts electricity pretty well, but the advantage of gold is it does not tarnish at all, ever. So they like to use that in space equipment, because you send something out into space, you can't have it tarnished, you can't replace it. Gold is basically immutable, indestructible. So in a sense, gold in that case has even better properties than silver, because it is conductive, but it doesn't tarnish. Number 11, there are relatively few pure silver mines. There's many gold mines with few primary silver mines. Most of silver is mined as a byproduct of other mining operations. In the world's mines, there are fewer known silver reserves, 150 million ounces, than gold reserves, 4,000 million ounces. So there are, right now, if for silver to add to supply, it's kind of dependent on the copper, tin, lead, zinc mining. Otherwise, there's not many places you can go. Most of them are in Mexico to get just silver. Number 12, I like this one. Governments and Keynesians do not attack silver the way they attack gold. The mainstream media does not attack silver. And that's probably because they don't want if a lot of people were interested, there's another blog post they did on this. If only 1% of the United States labor force saved small amounts in physical silver, they would eat up like half the annual silver mining production. Well, that doesn't take into account India and other demands in China, anywhere else in the world. And it doesn't take into account if maybe 3 or 4% of the US labor force decided to invest in small amounts of silver. So I think they just basically want to ignore it. Now, gold is viewed as the threat. Remember, central banks own it, to fiat currency. John Maynard Keynes called gold a barbarous relic. He and his disciples resented the gold standard because of the economic discipline it imposed on governments. At the time, during Bretton Woods, he was a advisor to that whole event where the United States dollar was named the world reserve currency. What he did not want the gold standard in there. It was the other countries that said, whoa, wait a minute, we don't want to have this dollar standard unless the dollar is backed by gold. They wanted the United States to have that economic discipline. So there you have it. There are your 12 differences. If you have any more, let me know. If you have any comments, please leave them below.